Hello and welcome to The Trade. Before we get into the charts that matter, let's have a quick look at what traders are watching out there. And of course, a lot happening. Australia will not be exempt from US steel and aluminium tariffs that President Donald Trump's administration will impose. And we have actually just heard from both Penny Wong and also Anthony Albanese, the Prime Minister, just in the last couple of minutes. And Penny Wong has lashed out on the Trump tariff, saying this is no way to treat a friend. The expanded tariffs are expected to hit goods from horseshoes to bulldozer blades. And in other news, we also saw that US job openings rose and layoffs were pretty low before the Trump policy shifts, while the US House Republicans have passed a stopgap bill to fund the government. All right, let's have a look now at the charts that matter and get into the technicals with Nick Twidale from ATFX, who joins me now. Kicking it off with what we're seeing in the Aussie, and a lot of momentum, whiplash if you will, amidst all these trade headlines coming through.
Yeah, there are. I mean, and the Aussie's more vulnerable than some other currencies too. And over the last few weeks, Aussie's pretty much been on the back foot, despite rising against the US. We've seen on the crosses that, especially Euro Aussie and Sterling Aussie, that the Aussie has been on the back foot. And any time this lack of certainty and the trade issues and a continued global trade war comes on, the Aussie is going to suffer a bit. But we did see a little bit of a bounce last night. We came back up to 63 cents, which was quite nice. But if you look at those charts, we're still very much on the back foot. They're the longer term charts. I think most people are favouring still to sell rallies in the current environment. And until we get some sort of clarification on tariffs, on where global trade's going to be in the next 6 to 12 months, then I think the doubt that's in everyone's mind will continue to put pressure on the Aussie.
So the downside looks like it's more likely to be hit there rather than getting back up to that 65 cent.
I think so, yeah. That 65, that's probably the initial target we've got on the top side, that 200-day moving average coming in just above 65 cents.
All right, let's look at what we've been seeing in cable as well. We did see a little bit of a pickup coming through in the euro, which we'll get to in a moment. But what are we seeing with sterling?
Sterling's in a similar situation to the euro, funnily enough. The dollar's taken a massive hit over the last few weeks. We've seen the dollar index track down sort of over 3%, and that's enabled cable to rally and euro to rally. The euro rally obviously came back on the back of stimulus from the German government, and then we can see sterling's rallied really nicely. We're just up to around that key, just underneath that key 130 level. I'm not sure how much further we've got to go. A lot will depend on the dollar's side of the equation. We do have one piece of data coming out in what's quite a slow data week, which is the UK GDP. So it's going to be interesting to see how that's tracking with regard to cable. But key for us all tonight in all the currency markets is going to be that CPI data.
Yeah.
Strangely enough, for CPI, which comes right in the middle of the week, which is a very slow news week, you'd normally expect that to dominate what's going on, but geopolitics is probably going to
kick in. Is it a slow news week?
Slow data week, I should correct myself. Very slow data week. News week, not so much.
Not so much.
So I think geopolitics will dictate. But for cable, I think if we take away those updates from that are coming thick and fast, we're looking at that CPI data tonight. If it does come in a little bit weaker and show that we're going to have rate cuts definitely coming in May from the Fed, and even pushing them a little bit further closer, then we could see that extend, and a break of that topside line. It's not the best resistance level, but it could see us accelerate up to those 132 levels. Conversely, another strong print like we got last time, drop us straight back into the range.
All right, so you're saying a similar move in the euro, and I heard this new word too, Trumpcession, a recession caused by Trump. So does that mean the rally sort of just beginning potentially for the euro?
There's a possibility of it, but I think it's very difficult to say. I was trying to say something the other day. Less than a week ago, if we'd have used the words recession in the US, people were kind of laughing at us, and now suddenly we're putting every stock move on the back of this pending recession. So I think we need more clarification from data. We definitely need more clarification on what really is going to go on with trade, as he's flip-flopping on 10-minute intervals at the moment.
Yeah.
So once we get that, we might get a bit more surety. But yeah, I think euro could move to the top side. At the moment, I'm favouring fading these moves. I think it's overdone in the dollar. I think this euro move's probably a little bit overdone. And as you can see from this longer term chart, I'd favour fading moves towards that longer term resistance. And that is a good resistance level. That's got a few touches on the top side, goes all the way back to Q2 2021. I think we could see a move back into the range, but it really will depend on what we get as updates, and there could be thousands of them soon, and what we get from CPI tonight.
Now the yen, a 5-month high. You've also got Japan producer prices in focus as well as US CPI. So does that mean you could potentially see a bit of a carry trade unwind here?
We've seen one already, haven't we? So I think there could be even further. There's talk from one of the bigger Japanese banks that they're looking for even more rate hikes from the Bank of Japan than expected. That just came out yesterday. A clear downtrend from the daily charts there. But we're talking dollar yen here, so we're talking big figures in minutes, as we know at the moment. So I favour selling the rallies at the moment. I'd be favour selling a rally up towards 150. I think the dollar against the yen is particularly under pressure. I think Aussie against yen will be under pressure as well, certainly while we're seeing stock markets under so much pressure. But so overall, I fancy favouring buying the yen against dollar and on the crosses. Where we go from here, from a trading perspective at the moment in the middle of that range, is it literally could do 300 or 400 points either side on tonight's data and or on tariff updates. So I think dollar yen, as usual, put your hat on.
Yeah, and our quick friends in Canada as well. I mean, a lot of investor unease about the tariff situation there.
Yeah, and we've got Bank of Canada tonight as well.
Yes, of course.
So another one of these instances where you've got key underlying macroeconomic fundamentals that are going to be knocked out the park by geopolitical updates. But we're expecting 25 basis points from them. It's going to be very interesting to see what the bank says with regard to these trade issues that Canada and the US have clearly got going on fairly hard at the moment. I think the only thing you can call for the loonie tonight is much more volatility.
Yeah, all right, volatility is the name of the game. Thank you, Nick. As always, Nick Twidale from ATFX. Just having a quick look at the Canadian dollar there. That does it for this edition of The Trade. Be sure to join us again next time.